Welcome, dear learners, to the third lecture of Public Finance under the module of Fundamentals of Economics and Financial Market. And I am your instructor, Dr. Parul Jain from the Department of Economics, TAV PG College. Till now, we have discussed what is public finance, subject matter of public finance, public good, the theory of allocation of public good, and an important subject matter of public finance, that is the public revenue. And in public revenue, we have discussed taxation. In the earlier lecture, what we were discussing was what is tax, its characteristics, what are the various objectives by which tax is taken, and an important aspect of impact and incidence of tax. Three theories were also discussed: diffusion theory, concentration theory, and the modern theory, which says that relative elasticities of demand and supply are responsible for shifting of taxes. That means the impact is on one and the incidence is on other. So let's start today's discussion. In today's discussion, we'll discuss various factors that affect shifting of taxes along with few types of taxes. First and foremost factor that is responsible, that influence the shifting of taxes, is elasticity of demand. Elasticity of demand is, if the demand is inelastic, the tax can be shifted by the seller in the form of increase in price. However, if the demand is elastic, the tax cannot be shifted by the seller in increase in price. That means inelastic demand, tax cannot be shifted forward. In elastic, the tax can be shifted. Reverse is true with the supply. In elastic supply, the entire burden of tax is borne by the seller, and elastic supply, the burden can be shifted to the taxpayer. These two factors of shifting we have discussed in the earlier lecture as well. The third important factor that influences the shifting is the availability of substitute. If a product has substitute of it, then what would happen? If the price is increased by the seller, then the consumer, what will they do? They'll start consuming the substitute of that product, so the seller cannot increase the price. If a close substitute is available for a specific product, then what will? The demand for that product will change if it is witnessed with a price increase. As it happens, I have two pens. If the price of one pen is increasing, both were of 10 rupees, but somehow if X brand increases the price of the product, I'll immediately go and purchase Y brand's pen because earlier they were of the same price and same marking scheme, same quality was there. So if a substitute is available, the tax cannot be shifted in the form of price increase. Then comes the tax area. Tax area basically means where the tax is imposed. See, in a local area, it is not easy to shift the tax because the buyers, the consumers, which will immediately shift to the nearby markets. But in an area which is international or a big area that is far away, the taxes can be shifted. So, local areas, nearby areas, it is very difficult to shift the tax when there are multiple markets available. Then comes the time period. In short time period, it becomes difficult to shift the tax. Why? Because supply in short time period is inelastic. So when supply is inelastic, you cannot shift the tax in the form of price. However, in the long run, the supplier or the manufacturer can gather the factors of production, the supply can be increased, so the tax can be shifted. Price. Price becomes an engine of shifting. It is the price, when we are talking of shifting again, it is the price that leads to shifting. The increase in price, that means we are shifting the tax. If we are not able to increase the price, that means we are not shifting the tax. Coverage of tax, type of tax that is imposed. What all taxes we are covering, which different types of taxes are there in the area where the tax is imposed, where the shifting can take place. Then it is on nature of demand for commodities. On perishable goods, it becomes difficult to shift the price. On vegetables, fruits, we cannot shift the price. On milk products, it is not very easy to shift unless and until it is a necessity. So nature of demand of a commodity restricts the shifting of price, but a commodity that can stay for longer period of time, the tax can be shifted. The business conditions are also responsible and serve as one of the factors for shifting of taxes. If the is in boom phase, prosperity phase, employment is high, income is high, optimism is there, investments are there, then what would happen? People would have money. They won't mind if the price of a commodity increases. However, if the economy is in recessionary stage, in depression it is thoroughly not possible. However, if the economy goes into a recessionary phase where these indicators are not giving a positive response, employment level goes down, income is down, a wave of pessimism comes in the economy, capital investment has reduced, in that conditions people will not pay. Consumers will not pay the higher price, they will not be ready to pay the higher price. So the tax, it becomes difficult to shift the tax. Thus, business conditions serve as an important factor for shifting. Then it comes the types of taxes. Whether the tax imposed is on indirect taxes or on direct taxes. Indirect taxes, it becomes easy to shift the tax than to direct taxes. As we have mentioned the name of direct and indirect, so let's discuss what are the various types of taxes that are there. First and foremost is the direct tax. Direct tax is a tax on which, what I was telling, if A is a person, a taxpayer on whom impact is there, first time the tax is imposed, and incidence is also on the same point. That means both impact and incidence is on the same individual, then we say it is the direct tax. That means a tax in which one is paid by the person on whom it is legally imposed. It is called the direct tax. Example of direct taxes of central government when we talk is income tax. It is imposed on the income of an individual and the individual has to pay the tax. It can be corporate tax, that is the business units on which the tax is imposed. Land revenue, agriculture tax, professional tax, tax from business and profession, house property. These all kinds of taxes are a form of direct tax of center and state. On whom the tax is imposed, it is paid by the same individual. That is the taxpayer, that is the SSC. Thus, the direct tax is economical. Imposed on X, paid also by X. So, you need not to look around who is paying the tax. Cost of administration becomes less, so it becomes more economical. Everyone knows how much tax I have to pay according to the tax system. Direct tax helps to fulfill the principle of equity. A person who is having higher income pays higher tax. A person who is having lesser income pays lesser tax. As I told you, equity is people under similar circumstances are treated similarly and people under dissimilar circumstances are treated dissimilarly. So, a person with higher income is paying more tax, a person with lower income is paying less tax. So, the principle of equity is fulfilled or satisfied. That is the advantage of direct tax. Then, certainty is there in the direct tax. We know how much tax, with what rate, when to pay the taxes. So, SSC very well knows in advance that what are the various structure of tax. So, certainty is there. Elasticity is there. If the rate of taxes change, the responsiveness that the tax revenue also changes accordingly. If the rate of taxation goes down, tax revenue is lower. If the rate of taxation increases, tax revenue increases. So, element of elasticity is also there. Then, social impact. Social impact basically says, see, when we are paying the tax, again and again we say tax is a sacrifice, what is felt by the SSC. When we are paying the tax, we are very vigilant. Vigilant is what sense? How our tax is being spent by the government. So, social impact is there. We always look for the benefit received principle. We always look where the government has spent. So, accountability increases and society develops because of that social impact. Then this tax has distributive justice. Distributive justice basically says individuals are paying taxes according to their ability. You have higher ability in terms of income, you are paying more taxes. You have lesser ability in terms of income, you are paying lesser taxes. Thus, the distributive justice is there. All these things reduce inequality. Richer people are paying higher tax and the lower income groups are paying lesser tax. So, inequality, the difference between have and have nots, can be reduced. However, direct taxes beset with various disadvantages as well. First and foremost, it is very unpopular. Unpopular because the direct burden falls on the taxpayer, so we don't like to pay taxes. So, it becomes unpopular. However, it is our responsibility to pay taxes. There are too much, since it is a direct real money burden on individuals, so the possibility of evasion exists. Now, what is this evasion? Evasion basically means we are not paying exact the tax amount what we should pay. It includes a malpractice, a malified motive, and is illegal not to pay the tax what should be paid by us. So, possibility of evasion is there. It tends to be arbitrary. That means people mold, avoidance also comes in, people mold, try to switch, try to make the tax amount reducible by making use of various loopholes in the tax system. This is also kind of tax avoidance. And it has a narrow base. Narrow base basically implies the direct tax is imposed on only on that section of the society who is earning. So, it is only touching certain section of the societies. All the society, all the economy, all the people in the economy are not covered in direct tax. The reverse of this is indirect tax. Indirect tax says when impact is on X and incidence is on Y. That means first place the tax is imposed and this is the final resting place of the tax. Taxes which are shifted quickly through commercial competition between consumer are indirect taxes as told by Hartley. That means impact and incidence of payment of these taxes is on different individual. Very popular indirect tax, GST, Goods and Services Tax, that we see that came into existence on 1st July 2017. Apart from that, we have customs duty, entertainment tax, vehicle tax, stamp duties. These are all indirect taxes. Indirect taxes have few merits, that convenience. We are going, indirect taxes are generally hidden inside the price. When we are going to market to purchase something, we are paying the MRP of that product. That MRP not only includes cost of production, but amount of a percentage of taxes as well. So, it is convenient for the government, for the seller to take, because we are paying just the price of the commodity and this tax is hidden inside that. So, we don't mind paying, convenient to pay, convenient to collect and administer. Elasticity is there, prices, if the price increases, If the tax rate increases and the seller is able to shift that in the forward direction, so the amount gathered from the revenue collected, the receipts increase if the tax rates have increased. Since they are hidden, so no scope for evasion. You cannot escape this tax. Wide coverage, whosoever is purchasing, whosoever is utilizing, whosoever is the consumer is paying the tax irrespective of the level of income. It also promotes social welfare. See, here it means that if high rate of taxation is imposed on the commodities, on the goods that harm our health, then the prices would increase. Few people might reduce its consumption and their health would have a better situation. So it promotes social welfare in terms of health conditions. It is more popular than direct tax because burden of this tax is not directly felt by individuals and consumption of products and goods satisfy our utility, so we don't feel this burden. The demerits involve regressive in nature. Regressive in nature basically implies that if an item is purchased with a high price, it can have different impact on the pockets of the individual. Even a consumer good can have different impact on the pocket of the individual. It becomes regressive as the richer would feel its burden much lesser than the person who has less income. It is uncertain, prices change, so you cannot very well predict. Whenever you are purchasing a thing, you are paying that tax, and it is inflationary in nature. Inflationary in nature, when the prices would increase, in the earlier lectures we have discussed, the process of rising prices is inflation. So when the prices increase, inflationary pressure is witnessed by the economy. Then we have proportional tax. On x-axis, if a tax on all income is levied at the same rate. This is just a hypothetical example in the form of table what I have shown. I have taken the first column income in rupees, then rate of taxation, and then the amount that is calculated out of this income. You can very well see that the rate of taxation is constant, is same, is flat, whether you are earning 10,000, 20,000, 30,000, 40,000. This kind of taxation is witnessed in corporate tax, where the rate of taxation is proportional, that is flat rate. On x-axis, we have taken income, and on y-axis, we have taken rate of taxation. So, you can see, irrespective of change in income, the rate of taxation remains at 5%. However, it is simple and uniform, easily administered. 5% rate is on all income group. It satisfies the canon of certainty. It will not adversely affect the saving and productivity activity because certainty is there, people know, and it will not adversely affect the willingness to work. People know this much amount of tax is there, even they are earning 10,000, 20,000, 30,000. For corporate tax also, for domestic and foreign companies, the rate of taxation is different, but up to a certain amount, the rate remains the same. The demerit is inelastic. Not much scope because the base is quite wide and will not lead to equitable and just distribution of tax burden. A person who is earning more would obviously feel the burden less as compared to the person or the industry who is working, who is earning less. This another kind of taxation what we see is the progressive tax. Progressive tax basically says as the base changes, the rate also changes. This is the tax base in the form of income, and that is the tax rate on y-axis. You can see as the income is increasing, the rate of tax is also increasing. The example for progressive tax is income tax. This I have shown with the income slabs for the financial year 24-25. You can very well see that up to 3 lakh of income, no taxes charged, that is, that income is exempted. 3 to 7 lakh, 5% rate is there. As the income increases from 7 to 10 lakh, the rate of taxation is 10%. 10 to 12 lakh, it is 15%. 12 to 15 lakh, it is 20%, and above 15 lakh, it is 30%. So, as the income base is increasing, so is the rate of taxation. It is called progressive tax. An example of this is income tax. Thus, it justifies the canon of ability. Who is earning more is paying more, reduces inequality of income and wealth. Canon of economy is satisfied. It is highly elastic. Rates change, so the tax receipts or revenue change, and it is productive. But sometimes it becomes uncertain and arbitrary, adversely affects production and discourage capital formation, and there is huge scope of evasion. Then is your regressive tax. Regressive tax, this is just an example. This table I have given for an example. Regressive tax is a tax schedule in which the rate of tax decreases as the tax base increases. This is the tax base on x-axis. This is the tax rate on y-axis. You can see it was there on tax on salt during British rule. This tax was imposed. As the income is increasing, the rate of taxation is going down, regress, going down. That is the way of remembering this tax. Then is your digressive tax. Digressive tax is the one which is progressive up to a certain limit, and then it becomes proportional. As you can see, income is increasing in rupees, income is increasing. Tax rate is in percentage. You can see as the income is increasing, initially the rate of taxation is increasing from 10% to 15%, 20%, and then after that it becomes proportional, that is flat. It is very well seen in the diagram as well. Initially your rate increases with the base increase, and then it becomes flat. That rate becomes constant irrespective of change in base. Another type of tax that we see is specific duty. Specific duty basically implies a tax when it is imposed on a commodity according to weight, size or measurement. That means not according to value, but according to weight, size and measurement. Say, if I bring two commodities, one diamond and one stones. So, in which category I need to pay higher taxes? Obviously, it will be stones, because the weight of stone would be more than the weight of diamond, although the value of diamond is much higher than the value of stone. This kind of duty it can be seen in the form of excise duty imposed on sugar on the basis of weight, or cloth taxed according to its length. Cloth can be taxed according to its length and measurement. So it becomes sometimes difficult to have the correct and appropriate tax. Merit includes easy to administer, estimate, convenient to collect, and cost is quite low. Every tax has a cost of collection. So specific duty has a low cost. Demerit is regressive in nature and less equitable. I gave you the example of diamond and stone. Ad valorem duty is according to the value. When tax is imposed on a commodity according to its value. If we go with the same example of stone and diamond, in specific duty I need to pay more tax on stones, but in ad valorem the value of diamond is much higher than the value of stone. So if I bring diamond, I need to pay higher amount of tax. Whatever size or weight, the tax is charged according to value. A more valuable thing you are bringing, higher amount of tax you need to pay. Less valuable, lesser amount. Thus, the merit includes greater burden on rich section, so more equitable. Demerit, difficult to administer and collect, and increase the inflationary pressure. So, these were few types of taxes what we have dealt with. along with the factors. For today, I'll give you a self-evaluation question that direct and indirect taxes are like twin sisters, among whom it is difficult to say which one is more beautiful. So comment on this if you have understood the direct and indirect taxes. These are the suggested readings for understanding these types of taxes. So thank you. We will be meeting in the next session and learning more about the taxation and its related concepts. Thank you for today.